What's up, everybody? It's Dre Trades, and today I have an exciting video, and it's a little different. I'm gonna show you how to make 20% in Apple stock. We're gonna make a trade that's gonna possibly net us 20% in about 3 weeks. God damn, that sounds salesy. Oh my gosh, all right, but it is what it is. 20% in Apple, so it's a little different today. But before we do that, let's look at the market real quick to see what's going on. You know I like doing this. Okay, so it's October 5th. It's 2:41 p.m. at the time of this video, all right? It's Monday, and you can see the Dow is just ripping 370, S&P up 46, NASDAQ up 194. Woo! Russell's up, VIX up, bad thing, okay? I don't like that. So why is the market up? Because Trump is getting better and because the stimulus, right? They're hoping for the stimulus. And here's a quick look at the heat map. Everything is ripping for the most part. We'll call it everything. The REITs are down and the beverages are down. It's damn near everything. So let's get into the stock charts. Let's talk about the trade and let's show you the setup. So here's Apple right here. There's the 1 minute ticker, right? I'm about to take this off and we're just gonna kind of concentrate on the daily. So I'm looking at this stock and we could see, all right, that from the high, I'm just gonna measure it, from the high to the low, this thing went down 35%. All right, it's 35% from its high. That's like bear market, right? That's like, what? Apple, what? All right, so from the bottom to the top to where we are now, it's up 11%. All right, so it's 11% from the high. And when I'm looking at it, right, I want to describe what I see. I kind of see a little, I'm reaching here, but it's a inverse head and shoulder. This shoulder is not the greatest, but right, so I'm expecting that to possibly pop. Possibly this distance right here, right? So we thinking maybe it goes up here, maybe it challenges the new high. Why is it going to get up there? I think right here, this alone, the earnings, right? Earnings is coming up. Oh, let's clear all my drawings out. You can see that head and shoulders. Okay, earnings is coming up October 29th after the market. So what I'm seeing right here is basically a nice little level of support right there, right? See if I can draw a better line. Yeah, right there. And I'm really focusing on this shoulder. I'm going to call it a shoulder. I know it's a shitty shoulder, but I'm calling it a shoulder anyway. And I'm looking at this low, right? The low of this particular candle is the low of that shoulder. Let's call it 112. It's 112.22. We're going to call it 112. So let's put a trade on, an options trade. Now, this is where a lot of people fail. I'm hearing, I'm all over the internet. I'm searching. Hey, everybody's buying options, and you have a down day and you're getting crushed. You're getting crushed buying those options. You can't do that, man. If you buy an option, particularly a call option, it better go up basically as soon as you buy it. So what we're gonna do is a put spread. We're gonna sell options, okay? We're gonna sell one and we're gonna buy another one further out for protection. Let me show you what I mean. So let's go to the options chart. Now, I definitely want to trade the options, the 18-day options, all right? And the reason why I say that is because the 30 October earnings is built in. Earnings is built in. You can see right here how the earnings just pop. It just pops from 42 to 47, right? And implied volatility. So we're going to trade these, all right? Because if we traded the 30 or anything further out, we're not going to really lose the value, right? We want to sell these options and we want the value to basically go to zero. If we do it with earnings in it, it's not going to go to zero because Apple can go all over the place, all right? Whoops. All right, so let's go ahead and you can see the trade. I got it on already. So right here, we're going to sell that. Remember that 112? Well, we're going to sell the 109. We're going to do a vertical. We're going to sell the 109 and we're going to buy the 105. All right, that's a $4 wide spread for 82 cents. Now, I put this trade on myself. I got 84 cents for it. Right now it's 82. See how I'm making money already? I already made 2 cents. All right. So let's analyze this trade right here. So I'm going to take it to the analyze trade. So basically, you see what we did? We're going to sell the 109, right? That means as long as Apple stays where it's at higher, it can even come down. We're going to make money. The only way we lose money is if it's below 109 at option expiration. All right, if it starts heading down that way, yes, we can lose money, but we're going to be collecting something magical called theta decay, because every day this option is in existence, we're going to make money, because this thing is losing value like psst, like the air coming out of a tire. All right, so here we go. We're going to sell that 109. We're going to buy that 105. Now we're going to analyze it. Let's see what, and we're going to collect 82 cents for it. Let me lock that in, and let's take it to the Analyze tab. Boom, right? So here, basically, if we do that one time, the most we can lose is $318, all right? I know it sounds like a lot of money. What? $318? The most we can gain is $82. Wait a minute. Wait a minute. Are you saying the most I can make is $82 and I can actually lose $318? Yes, because you know why it's like that? Because the odds of us being right is phenomenal. Okay, we can actually look at the odds. Where's the delta on the short strike? So let me go back to the spread. Basically, here's the delta, right? We're selling that. Basically, it has a 25. So basically, we're 75% chance of being right? So this trade is basically, it's gonna work. And let me see. If you flip a coin 4 times, 3 times, we're gonna call it. It's that one time. So that's why it's like that. We're gonna make that money. I'm telling you, we're making that money. All right. So here we go. So the most we can make is 82. All right. The least we can make, the most we can lose is 318. So 82 divided by 318. That's what we have on the table. That's actually 25%. Oh my gosh, I just showed you how to make 25% on your money. All right, isn't that something? Isn't that beautiful? This is what you need to do. You don't want to buy them options, man. You buy a put, it better go down. You buy a call, it better go up. Sell them all day. So that's what we're going to do. The break even, right? If we just let this go to expiration, the break even is 108.15. All right. So as long as we don't have to touch it, and as long as this thing stays over 108.15, we will lose zero money, lose nothing. All right. So that's like what, $6 away, $7 away. Okay. The most we can make, and we max out right about the 109.30, right? Anything over 109.30, we just made $82, right? We can walk away and close the trade. We max loss. Max loss is below 105. All right, so max loss 105, right? We're not going to let it go that low. All right, so let's look at the charts. First of all, the most we can collect is 82 cents. I want to get out of this trade. Where is Apple stock? There we go. I want to get out of this trade when we have the option, the chance to collect half of that money back, right? So we sold it for 82 cents, okay? We want to buy it back for 41 cents, right? So we immediately go to this trade tab, and I want to not sell. I want to buy it back, right, for 41 cents, and I want to put a good to cancel in there, and I'm done, okay? That's it. I'm done. We're going to look at it, and we're going to monitor it. All right. So what we're looking at, we're going to get out of this trade regardless. Okay. Regardless if this thing breaks 112, we're out. Okay. If it breaks 112, we're out, win, loss, or whatever. I don't want to be in it no more. Right. Because it had broke this line of support. Right, I'm hoping it goes up from here. I'm hoping this thing does head and shoulders, right? And we have the head shoulder thing going on. That's what I'm looking for. Let me pull up the 4-hour chart. All right, so we're right there. Now, the reason why I'm not down here collecting the money, reason why I didn't sell a 100, 95, it wasn't enough premium. I'm right there. I'm pretty close. All right, I'm 75%, going to be right, and I want to collect as much premium as I can before expiration. All right, so that's the reason why I chose this strike, and the reason why I chose this level and not necessarily this level. All right? That's an obvious level of support right there. All right, so we're gonna kind of get in closer, and we're gonna hope that level right there holds. Okay, so there it is, man. That's simple. The trade is set up. It's set up to make 25% on your money, but we're going to get out before that. We're going to get out with 41 cents. So that's 41 cents. We're going to try to collect 41 cents. So that's 41 cents divided by 318. So we're going to make 12%, right? We want the guaranteed 12%. Hey, if you do that every day for 3 weeks, you're gonna be a billionaire in no time. Okay, we don't want to hit home runs. We just want to pick up these crumbs, right? We just want to pick them up, scoop them up, make 12%. You know how long you got to keep your money in the bank to make 12%? Years. All right, we're gonna do it in less than 3 weeks. I promise you. We're either gonna make this money or we're gonna get out with a small loss. All right, so that's it. That's Apple stock, and let's look at it overall. Right? I showed you how. I showed you in the 4 hour. Now let's pull up the daily. I showed you in the daily chart how that looks like a mini head and shoulders, and you can see the support levels I drawn right there. But let's pull out a weekly because I want to show you something interesting, because Apple seems to always put in these V bottoms, like right here. I'm going to just go ahead and draw my circle. You know, for the most part, it just hits bottom, right here, bottom, draw, bottom. All right, bottom. It's not drawing right, but it's like right there. I'm a little off, but bottom. You get the point, right? Bottom. Okay, I think that possibly is a bottom too. They're very defined, right? Boom, and starts to go up. So I'm looking at that. I'm looking at the stochastic. See how it's about to cross over right there on the weekly. If we pull up the daily, all right. I'm not looking at the stochastic, even though it's going up. I'm looking at the crossover. The crossover of my 2 moving averages, the slow moving average and the fast moving average, right? That's the 9. The 9 is the slow. I use the 9 and the 20, okay? The 9 is the blue or the turquoise. The 20 is the purple. If you were to buy every time these cross, you're on the right side of the trade. All right, so that's it. That's the trade. The only thing I don't like about this trade, and I'm going to go right here. The only thing I don't like about this trade is this VIX going up is up 2.17%. That's what I don't like it. All right. So we're going to be quick on the trigger, man. I'm telling you, this thing breaks 112, we're out of there, boy. We're out of there. Now we could wake up tomorrow, the market's down 1,000 points, Apple's down 5. You know, we might be losing some serious money. Okay. But it is what it is. You have to risk money to make money. And we got a 75% chance to make 25% on our money, but we're going to be out at 12. So we even got a better chance than that. All right. So this is Dre Trades. Hey, man, I know it's a little confusing. We talked about selling options, selling put spreads specifically. If you have a question, you put it in the comments below, or you can hit me up on Twitter at Dre Trades or Instagram at Dre Trades, or, you know, the comments. Thanks for watching this video. Please, if you stayed this long, that means you liked this video. So go ahead and click that like button, hit that subscribe button, hit that bell, and be back tomorrow, because you're going to get the notification on your phone, and that's me. That's me right here coming back to you making a video. Thanks for watching Dre Trades. Peace. I'm out.